Good morning, everyone. It's Greg Fournier with CIBC in Hong Kong, and welcome to the Mines and Money panel discussion regarding China mining activities and investment opportunities. Good morning and good day to everyone, wherever you are. We've got a great panel today. We have Chen Lin of Lin Asset Management, Greg Pan of Hanking Industrial, Daniel Rickleman from Zhaojin Mining, and we're hoping that Maggie Huang from Zijin Mining will be able to join us as well. Thought I'd start off with some general questions for the panel, just to get things started on how they're coping with this current environment in terms of looking at investment opportunities and pursuing M&A opportunities. And the first question, general to the panel, and maybe I can ask Daniel to lead off with some comments, is how are companies and investors adjusting to M&A and investments in the COVID world? How have you had to adjust your DD processes and approach to completing transactions given the restrictions you have, particularly on travel? Daniel, you want to start off with that?
Sure. For Zhaojin, anything we look at that's material, we'll always have to do site visits, and spend quite a bit of time with management. So since the shutdown, that's something that we can't do. There was processes that we're in the middle of before the shutdown that we've had to suspend. And there's opportunities that have come up since that time that, are interesting, but we have to think realistically about how we can actually be involved in a practical sense, not knowing the date that we can travel again. So it has affected us quite a bit. And I guess it's impacted us in a way that we've shifted more to smaller opportunities that we can potentially get done without doing those site visits. And they might not be particularly material at this moment, but they might lead into something bigger once we can start to travel again.
Chen, how about yourself as a portfolio investor? How's this impacted your ability to pursue transactions and investments?
Yes, I'm based in the United States. I mostly invest in mining company, usually in Canada, occasionally in Australia and other places. So I invest, one of my key portfolio companies doing a transaction with Glencore in Peru. So due to the COVID, that everything was stopped. The mine even was shut down, so they cannot proceed anything. And exactly as Daniel said, right now they try to restart the negotiation, but you cannot travel, you cannot do on-site visit. So there's a lot that bring a lot of difficulties to close the transaction. Fortunately, Glencore is very cooperative. So hopefully in the next few weeks, we can get the deal closed.
Well, great, good luck with that. And Mr. Pan, how about yourself at Hanking? How have you guys been managing through this situation?
Yes, Greg, and indeed, I think COVID-19 has a lot of the impacts on the mining businesses, as the operator at Hanking has experienced very adverse impacts in the last 6 months. And not only Hanking, but also in neighborhood of all province here, there are many producers have downscaled or even halted their production due to the very strict orders of social distancing. And of course, I think in terms of the M&A, many cross-border travelings, of course, have to be cancelled. That also have very negative impacts on activities of international mining communities. Of course, acquisition mergers, which basically rely upon the international contacts. That's the most adversely affected mostly. But very interestingly, that some M&As still occurred in the past few months, as you saw in the news. And I would say that COVID 19 has quite a few major impacts. For example, now so big, video conferencing become very standard, contact tools now. And I do believe that this is a very low cost and efficient approach. And also that another impact that we have a lot of the talks with some of the companies and potential partners, and we use more digital forms, instead of papers or mountain of papers. So that's also another way that from the superficial perspective is changed. And also that we are more selective in terms of time spending and resource allocations on, in terms of projects and targets. Sounds correct.
Great. Well, thanks for that insight. I see Maggie has joined us. It's great to see you, Maggie. Maybe I'll go to the next question for the panel, and Maggie, if you can hear me, I'll direct it at you initially, given your new role managing Gold Mountain. Do you think equity markets currently, particularly for mining equities, are fully reflecting the impact of COVID on a company's performance? And do you think mining equities are cheap? Do you think they're expensive, or do you think they're fairly priced at this point in time? Maggie, could you hear that question? Sounds like she may not have been able to hear that. Chen, were you able to hear my question?
Yes. I mostly invest in gold mining, precious mining company right at this moment. I used to invest in other commodity. Right now, mostly focused in gold, the silver, and other precious metals. I believe right now the precious metals mining company are very undervalued. There is very little from North America. Okay, we're talking about United States and Canada. I don't know exactly about Hong Kong, but in North America, there's very little money flow into the mutual fund of precious metal. Okay, most people just trading the ETF. Actually, that's created a very big gap of valuations that a big company like Newmont and Barrick are very fairly valued compared with many smaller companies. So I see big valuation gap. Most of the gold mining company are not pricing 1,700 gold, maybe 1,500. So that's create a lot of opportunities for investor if you can pick the right stock. There's a lot of very undervalued company out there.
Great. Well, thanks for that insight. Daniel, how about yourself? You guys are always looking at opportunities. How do you think the market is valuing stocks at the moment? Are they fair, cheap, or expensive?
I think it's a real mixed bag across the different sizes of companies. I think mid to majors are fairly priced. Developers, it's all over the place, and I think that's a function of the kind of failures we've had, particularly in Australia, with those startups that haven't worked out as planned. So there's real quality out there that's very cheap, and maybe others that are fully valued, but it's being based on people following well-known management teams or trusted, major investors, trying to close that risk on the development side. So a real mixed bag in that size. The juniors, I think there's been some really amazing discovery stories, particularly in Australia, and people are having a lot of fun, betting on these things and making a lot of money. And it's a really kind of dynamic situation on that end of the market at the moment. But the groups that don't have those results are really still struggling. There's not that broad market support for exploration yet. But I do think as generalist investors start to become aware of the money that's being made on these discovery stories, and they're going to get excited about that, and you'll see a broader kind of shift into the lower end of the market that will support those guys that have been struggling for so long, and potentially that'll be the support that's been so long anticipated for that exploration end of the market.
Great, thanks for that. Maggie, are you able to hear me? I think you may be on mute though. Hey, good
Hey,
morning.
fine.
Good to see you.
Thank you.
We are just kind of going through a few general questions. Just want to get your views, given your role managing Gold Mountain, about the markets in general, equity valuations for mining stocks. You think they're reasonable at the moment? Are they cheap? Are they expensive?
Well, there was a period of time that the equity price we think are very, very low, which is, I mean, at the bottom of the V shape, apparently, towards the end of March. And but right now, we do think that it has come back to some of them even higher than before the pandemic hit. So, and I mean, like, I guess I get a lot of noise in the market at the same time, and like, God knows like who's like what is pushing up the price, but personally, we don't think that's sustainable.
Okay, well, thanks. Lots of different views from people, so appreciate that. Next question for Mr. Pan. How do you see commodity markets evolving as a result of COVID? And are there any obvious winners and obvious losers? And how does this impact Hong Kong's strategy? Mr. Pan, I think you're on mute at the moment.
Sorry about that. Yes, as I said, that COVID-19 has strong impacts, on both sides of demand and supply for mineral commodities. And the market reflection already confirmed that. And also, it seemed to be, overall, of course, I'm not talking about individual metals. Overall, the effect or the impact on both sides are very similarly weighted. So in other words, that they are somehow offset each other. And that's why you see that mineral commodity prices in general have not moved in a single direction. So there's some exceptions. For example, the precious metal, in particular gold, which has gained roughly about $200 per ounce, or about 13% increase from the beginning of the year. And also another exception is the iron price, which has increased from about $92 to $105 per ton, or about 10% increase. So we do believe that the impact of this COVID-19 on the mining industry will become alleviated. The impact going to be softened by the end of the year. But in terms of the recovery of this impacts, that would take another year or so. So in total time to recover from the impacts, probably about 18 months. So base metal commodity price, of course, has a chance to regain some of their losses, in the first half of next year. Particularly, I would say that consumption of copper will gradually, pick up as the economies are recovering. So in terms of the policies, I don't think Hong Kong will have any changes in terms of the strategic direction, but we will make some adjustments in terms of the pace and also selections of the projects. Thank you.
Great, thanks for that. The next question I'm going to direct to Maggie and Daniel, specifically related to the gold sector. The Chinese gold companies have been fairly active in the past few months in the midst of the uncertainty caused by the global pandemic. We've seen your company Zijin announce an acquisition. Shandong Gold have made a couple of announcements of acquisitions. So the gold companies have been very active during this time. What do you think they're seeing that the rest of the sector in China's not seeing, that's making them, move forward with M&A opportunities versus other companies that are not. So maybe Maggie, I'll ask you to address that one first, and then ask Daniel to give his views.
Well, sure. Thanks, Greg. Well, I think I can't speak for Shandong Gold, but we do, communicate on a, sometimes, and I know that Shandong Gold has a very good team as well, and Zijin has always been very active in the M&A market. So we always have, we have analyzed a lot of projects globally, which suits the investment criteria for Zijin Mining. And so we have built up like a quite comprehensive pipeline along the way. So we have been monitoring the market, and we have, we have done our homework. So it's not like, this time of the year we suddenly decided to be active. I guess that's not the case. We have, done the work along the way, and now it happened to be the time that we announced the transactions.
Now, how have you managed due diligence, in particular on-site due diligence? Were you able to complete that for the recent deal you've announced?
Well, for the transaction that which was in China, I guess like the lockdown, it's not there anymore. So we were able to come on site to do site visit, and we do have a very good technical team who spend a lot of time on site to make sure that we are doing the right thing, and to make sure that we do a thorough analysis. And for Guyana, we actually have communication with the company in the past, and we have we've done a lot of study on the company. So I guess we are quite comfortable with the homework we have done so far, and we are comfortable with the price that we're offering. So and it's not it's not transaction you done overnight. No, it's something we managed to do along the time.
Okay, great. Well, I know you guys are very thorough, so that's great. And congrats on all the transactions. Daniel, how about yourself? So you've seen your peers pretty active, and maybe this follow on for you is kind of how do you see Zhaojin playing a role in global gold sector consolidation going forward?
Yeah, likewise, I can't speak for the other companies, but I don't think this flurry of activity is necessarily indicative of some opportunistic, buying spree. Anyone who's worked with a Chinese counterparty knows that it does take some time, and these are the kind of end results of probably longer processes that just have to happen to have culminated in this period. And particularly gold over base metals, I just think that's a function of there's more gold deals generally. Gold market is fairly buoyant, so I don't think there's any distinction between commodity necessarily. And on that, you might actually see a bit of a shadow effect on deal making, in that the deals that were announced were in play for some time, and just were able to be closed even though the shutdowns were on. But now with the travel restrictions more broadly around the world, then those earlier stage or mid-stage processes are going to be affected more so, and you might have a 6-month or 12-month lag in that activity from that. And in terms of Zhaojin and our strategy, and compared to our peers, we're a bit like the younger brother to our bigger brothers in Shandong Gold and Zijin, who we really admire and who have really led the way in outbound investment in the last, or Zijin in the last over 10 years, and Shandong Gold more recently. So we aspire to do those really defining outbound investments. To date, we've done The biggest deal we've done is 10% equity in a company called Sabina Gold and Silver in Canada, development project that we love, and we're maintaining that ownership in Sabina and supporting them through development. We're still looking for that, company defining transaction that's outside of China, and we haven't found that yet. I think what we ultimately find will differ from what Zijin or Shandong Gold have done, and it's just a matter of finding the right fit, the right structure, and the right project that meets Zhaojin's needs. And just on that, I think that's something I'd like to express to foreign groups that look at China and talk about China, think about China and how they deal with Chinese companies. It's often said, this is how you deal with China. There's a checklist. You do this, or there's rules of thumbs. All Chinese companies are like this. This is how you deal with them. But I think that's a big mistake. Chinese companies are a very diverse group, just like Australian companies are a diverse group. You'd never go into a meeting in Australia with an Australian company and just say, okay, we're just going to do X, Y, Z because it's an Australian company and we should expect this. No, you'll say, who are you meeting? Are we meeting BHP? Are we meeting EMR? Are we meeting a junior that's just IPO'd or a mid-tier? All of those groups are going to have a very diverse culture, history, management, character, capacity, and all of those things impact how you deal with that company, how you approach them, and what you expect to come back from that. And China's no different. There's a huge range of companies here, and I'd say it's even more diverse than Australian companies because you have the state-owned versus private aspect as well. So I guess that's what I just like to express, dealing with Chinese companies, have an open mind and deal with things on a case-by-case basis. And that's a better way to approach things here.
Yeah, no, that's a great observation. A great observation. Question for Mr. Pan. We've seen a lot of news about increased regulatory scrutiny of investments into different countries such as Australia. Europe's talked about it, even Canada. Do you think that's going to make it more challenging for Chinese companies to make overseas investments, given there's going to be more scrutiny from regulators and maybe tougher to get them approved?
Right. Frankly speaking, that I did not really see very much differences. Last couple of years than time before in terms of the mining industry. In terms of the increased international, relationship, heightened, hurdles that's more occur in tech fields. Globalization, I said that has been the mainstream trend of the international, business dealings in last probably 3 decades. But this has been changed, since probably Trump, has been elected as president of the U.S. But I still feel that this regulatory hurdles mainly affects the SOEs. As a private company, Hanking, so far, and we have not really experienced, experienced anything. And we also don't expect or anticipate any more, changes in all acquisitions and investments overseas in the, in the future, at least in the visible future. So, so that's why, I feel that, mining space is relatively less sensitive. And, so far, I still feel that, at minimum. So, great.
Okay, again, that's great to hear. Very good observation. Just time for a few more questions before we're going to need to wrap up. Chen, as a investor looking at lots of different opportunities, But with the current extremely low interest rate environment, you could almost argue that the risk-free rate is now zero or close to zero, given where U.S. Treasuries are trading and yielding. Have that meant you've had to adjust your return expectations and potentially lower them and kind of have lower discount rates when you're looking at opportunities, or have you kind of kept things the same?
That's actually a very interesting observation. And the Fed just announced they're going to keep ultra low interest rate for at least to 2022, right? So at least next 2 years. This remind me the history, if history to repeat, remind me of 1998, right? After the Russian crisis and long-term capital, the Fed flooded the market. So with very, and then those money, a lot of those money go to stock market. So that's create a huge bubble and then lead to a 2000, the crash of 2000. And so in this ultra low environment I'm mostly investing in equity. So I see the at least in the United States, in Canada, in my part of the world, the equity price is going through the roof. I mean, it's not reflecting the fundamental. Okay, put it this way. So the people just using the money from the stimulus, from the government money, they go to all these trading platforms. In the US called Robinhood, they just buying stock and then every stock going up, including mining stock. So I see it's probably lead to another bubble, another crash. As an investor, we need to be very careful, very sensitive to what's potentially coming. And I also want to remind viewers that after 2000, what happened? Gold price took off. Okay, that's what after 2000. So if this bubble, this flood of the ultra low interest rate, that's a liquidity bubble, lead to another equity bubble and another crash, I don't know how high gold will be. That's a question. So that's why I'm very excited about the gold going forward, and seems to be very positive in short term, mid-term, and long term. Just remember, right now it's the summer. India is in pandemic. There's very little physical demand from India. Gold already hit new high. What happened if the equity bubble passed in a couple of years?
Okay, well, clearly you're a gold bull, and I can't resist asking this of the panel. What's your prediction for the gold price at the end of 2020? We're what, $1,760 or something like that at the moment. Where do you think the gold price ends?
1823.
Okay, Maggie. Maggie, I think you're on mute.
Well, only only God knows, right? However, but we're not very surprised to see the gold price have strengthened so much, given the volatility in the markets and all the uncertainties at the time. But as a gold miner, we are we are apparently benefiting from such a market. However, we won't set our however, when it comes to production, cost control is still a very important factor for us. So prediction of the gold price, I would say it's a bonus to a gold miner like us. I mean, the actual, if the price is going to go really high, it's only a bonus to us.
Okay, well, great. You're being very diplomatic here. Okay, I think we've got time for one more question, and I'll ask Mr. Pan, and it's two-handled. One, you're in the iron ore business, so I should ask you, what do you think the iron ore price will be at the end of 2020? And second, the Chinese economy, government's withdrawn their GDP growth target for the year. How do you see the economy performing this year, and what do you think is going to be Chinese GDP growth for 2020?
It's very surprisingly that China's steel production levels continue to to increase. Actually, this year is climbing to near record level posted in May. And also that China recoveries has been sharper and faster than we had anticipated. Although there are some signs of Chinese supply side recovery is slower. But anyway, yeah, answer your question. It's very tough. Just guess. Probably I still feel that iron ore price is going to be better than many people think. And also, I would say that going to remain over 90. That's kind of the benchmark I would like to look at. And second, that GDP, I would say that as long as the COVID, not coming back, as a second wave, as China going to achieve, 3% GDP, that's possible. Thank you.
That's great. Well, that would be a fabulous outcome for the year, given how things have started. See, it's 20 past. So I think our time is up. So I just want to thank the panel, Chen, Daniel, Maggie, Mr. Pan. It's been great to see you guys all remotely. Hopefully we'll be able to do this in person next year at Minds and Money. And thanks to Minds and Money for giving us all the opportunity to participate and share some views. So thank you very much, everyone. Have a great day.
Thank you. Thank you, everyone.
Thank you.
Thank you very much.